2025 is likely a non-consensus extension year from the one that has passed, where a lot of the exuberance and risk on performance starts to unwind from overbought conditions. And certainly part of that story has been the Trump 2.0 discount in the market, which now is unwinding as we speak. And certainly a range of markets represent that: S&P 500, Bitcoin, as well as the US dollar in terms of some of those momentum trades. And on the dollar side, that is looking like it will unwind short-term tactical, and over the next few months start to correct some ground to the downside, and ultimately a flat to weakening US dollar expected. Also keep in mind impact of FOMC and how that might influence interest rate differentials.
Well, thinking about Trump 2.0 and thinking about Fed as well, yesterday, when you think about the performance of Wall Street, we were down on the day across the three major indices. I'm just wondering whether this is actually setting the tone for 2025.
As the year starts, so the year follows. It's part of a seasonality pattern known as the January barometer, and certainly it's an early indication of what's to come, and certainly the sentiment and confidence in the market. So given that we did already have an exuberant 2024 year that has passed, that's record momentum and positioning levels, we're likely to unwind a little bit from those overextended extremes. And certainly the S&P 500 is a case in point. There is a triple whammy headwind that remains: momentum, exhaustion, rotation fragility, and bearish cycle confluence. Right here and now, as we look at the chart of the S&P 500, we can see the election price gap at 5860, 5700 as a key make or break stress test for the market. Also keep in mind the election playbook: buy the rumor, fade the fact. As we go into the Jan 20 inauguration, that's a combination of, as just mentioned, pressured overbought momentum, but also policy stress test for the first 100 days of the new president-elect.